But first, on oil and gas, Bob, I mean, the news or the quasi news and oil dropping on this, is this what you expected? Is this how this is going to end? Like kind of with a slow return to a normal price of oil, or are we permanently higher? What what do you think of what's happened in the last little bit?
Well, you see normal price of oil. What's the new normal price for oil? Obviously it's pulling back today to $100 a barrel. All right. So we'll see $100 a barrel is still a lot higher than $60 a barrel, obviously, that it was at a couple months ago. But again, the headlines are driving the movement in the oil price. It remains very volatile. As you noted, Trump's going to give a speech tonight at 9 p.m. And it's already come out and said that he expects to exit Iran and wrap things up in 2 to 3 weeks. He claimed this morning on a post in True Social Media that Iran has asked for a ceasefire, but he said they will not do anything until the Strait of Hormuz is open. So that's sort of his one demand, that if anything happens, if there is a ceasefire, if there is some sort of deal for peace, that the number one goal that must be attained is that the Strait of Hormuz be open. So we'll see. We've heard a lot in the past week, most of which is hard to verify, and some of it being countered by the news reports you get out of Iran and what they seem to be saying publicly. So we'll see how this sort of plays out. But again, oil's still at $100 a barrel. Now, I do think the market is buying a little bit more into the fact that there is some resolution near term, and that if you look at the 12-month strip and you look at the December and January contracts for WTI crude, they're at around $70 a barrel now, when they'd been holding in around 75, when oil was front month spot price was even lower than where it is today at below 100. So the market seems to have eased back a little bit on its longer term expectations, and assuming that some sort of deal will occur here and this is not going to be a forever war. So what is the long term normal oil price? Again, I think it's around $75 a barrel. Yes, in the meantime, we have lifted sanctions on Russia that allow them to float oil and sell it to India, and some of those cargoes did get through the Strait of Hormuz into China. So if all of a sudden in 2 weeks there was a deal, the Strait of Hormuz was open, yeah, you can see oil come back down to 80, 75, $80 a barrel near term. But we're not going back to $60 a barrel anytime soon. With oil pulling back, the names are down today, which they're going to continue to be volatile. It's hard, to pick and say, well, I think there's going to be a tweet from Trump tomorrow that's going to drive down oil. I'm going to sell all my energy stocks. That's just not something you can do or predict. And I'm sticking with the names. Yeah, they're going to be volatile. They're down here. I'm not selling anything on this news. I think long-term valuations are still solid. Yes, they're going to be volatile. The one thing that's interesting, and I like to play around with options. I'm not doing this because I've got a full position in C&Q. But if somebody wants to sort of, play around here, maybe they don't have full exposure to energy, you can sell a June $40 put on C&Q for $1 here. You could this morning, which is 2.5%. If you get put the stock at $40 in June, which, given where valuations are, I think would be very cheap. At that point, you're getting at $40 a share, you're getting a 4.5% dividend, and you've made 2.5% on the dollar premium and selling the put out at June on the $40 put. So, just I'm not doing it. It's just something that popped in my head to say, well, what's interesting to play here with the volatility. I'm not buying or selling or trying to chase these things either way, and you just can't predict how the headlines are going to push oil prices near term, what Trump's going to say tonight. It's sort of something, just if you don't have full exposure to energy or want to sort of play around, it was something I thought was interesting.
So you think $40 on CNQ is a good price, and you'd be interested if you didn't have a position to buy to build
Yeah.
start to build one there.
So, but otherwise, I'm watching the gas names expand, EQT, some of these to see what they do here in the face of natural gas below $3. I'm not doing anything with them. I'm keeping an eye on them. They may get to a point where they pull back to level where I get interested in buying or adding to those positions. I just mentioned that, just given how natural gas prices are acting independent of oil, and how if we may get more of a pullback in the gas names and the oil names on any pullback in the commodity here.
Mm-hmm.
Bob, I asked you this last time we were together, and I'll ask it again. It's in The larger question is what can go right, and clearly what can go right is that we can reverse the prices of crude, which starts with them flattening out a little bit, which is kind of where we are at 100. But the larger question, in light of the last few days and the price action, how much of this was a reflection of just positioning going into month end, a combination that kind of mix you get of equities, treasuries, and oil, and kind of the unholy alliances there. A lot of people marking up their books. How much of they do you think was reflection of that versus what's tweeted? I mean, it's I can't imagine the social media kind of utterances are getting all of that much play. How seriously are folks taking that in terms of putting real money at risk? It's largely unknowable, except for the people front running it overtly, kind of every time there is one of these announcements. But other than that, the target seems to change. And what are your scenarios in terms of what can go right and what can go wrong? What can go wrong seems to be it's not up to the U.S. anymore whether or not we actually end this. What could go right is that we just return to the status quo, only with slightly greater tension levels. Which do you think is more likely? And is there something I'm missing?
Um, as far as positioning in the quarter end, it's hard to say. I mean, were companies buying energy stocks up until yesterday to show now as reports come out for the first quarter that they owned energy at a point that there may be a peace deal and stocks pull back from where they were on March 31st? I don't know if a lot of people were trying to position for that. Maybe they were trying to say, yeah, we did own energy when it outperformed and was up in Q1. But as far as Q2, that's a little bit risky because you really have to make a call on, as you pointed out, what goes right or what goes wrong here in the second quarter. What goes right in terms of just oil prices pulling back is sort of what's right for the market may not be right for energy stocks. But what could go right in terms of oil prices pulling back here is that there's a peace deal in next week. There's a ceasefire.